People are saying, why am I doing this if I can have, still have tax deferral? Oftentimes we increase people's cash flow by 60% on average, and no more risk in the sense of, you're not tied to your property as far as that risk. The investments are subject to risk, so there's always risk there, but you can diversify. And that's the beauty of what we do with the deferred sales trust. We can diversify your equity.
What is the difference, between a 1031? What are the alternatives? Let's say we have a 1031. We have, which most people know what that is, who are listening. We have something called a Delaware statutory trust, which is not what we're talking about today. And we have what? The deferred sales trust, right?
Yeah, those are three. You can do a traditional 1031 exchange. You can do a Delaware 1031, also known as a Delaware statutory trust. You can also do cost segregation to offset capital gains tax by accelerating the depreciation on such as multifamily assets. You might do an opportunity zone, if you can hold the capital or illiquid for a long time. You might give it away to charity. So there's definitely some options. The question is, Julie and Joe, is what are you trying to do? And that's the first question we're asking our clients. Hey, your A is where you're at and B is where you want to be. And what are your goals and ambitions? And what are your desires? What are your challenges and your problems? Why are you selling in the first place? What's your motivation to sell? Why not just hold on to the property? Why not just refinance and go buy it somewhere else? If you refinance, you don't have to sell, and you don't have to pay capital gains tax on a refinance. So there's all these different reasons why someone might sell. Okay. We're entering into one of the largest wealth transfers in the history of the planet right now. Just the sheer demographics are pretty astounding. And there's a stat that I think is really interesting. And it's according to the American Bankers Association. They found that there's about 77 million baby boomers in the US alone. And every day they're turning 65. And a number of other studies showed there's going to be about $30+ trillion that's going to transfer from the baby boomers to the millennials in the next 18 to 20 years. And this is known as the largest wealth transfer in the history of the planet. And there's a number of reasons these baby boomers want to sell. It could be health. It could be time and energy. It could be retirement. It could be starting a new business venture. It could be ending a partnership. It could be death. It could be divorce. It could be a number of things that make and increase the motivation for someone to sell. So then the question becomes, what's a good plan? And who are the good team members to help, them execute what they're trying to do? And too often we've been taught that the 1031 exchange blockbuster is the only way, that you swap until you drop and you get a stepped up basis. And that's the end all be all. And there's a lot of people that don't want to deal with the toilet's trash, the liability, the illiquidity, the rising interest rates, the ever increasing government regulation on a number of states such as California. I mean, it's a nightmare to own real estate for a lot of my clients compared to what it was, 10, 15, 20 years ago. And people are saying, why am I doing this if I can have, still have tax deferral? Oftentimes we increase people's cash flow by 60% on average, and no more risk in the sense of, you're not tied to your property as far as that risk. The investments are subject to risk, so there's always risk there, but you can diversify. And that's the beauty of what we do with the deferred sales trust. We can diversify your equity into multiple different cash flowing machines, different investment classes, dollar cost average. And I mean, it's 2023 now, right? There's got to be a better way than the 1031 blockbuster. And there is, and this is what we're here to help people unlock for themselves and their families.